Welcome to this Money IQ help video. This is all about tax, the basics. So this is the basics of the UK personal tax system. So what is tax? Oh, tax is a levy, a proportion of your income that is used to pay for the things our government decide that are needed. And the tax is collected by Her Majesty's Revenue and Customs, and that's where it gets the title HMRC. Now, tax is collected on a number of ways, and it depends on the type of work you do. Now, tax also includes the concept of what's called national insurance. And national insurance was created as the thing which looked after pensions and the health service, but it's really evolved into a parallel tax system. Now, what kind of personal tax is that? Well, if you're employed, you'll be assessed by what's called the pay as you earn method, or PAYE. So tax is deducted by your employer and they pay that tax to the HMRC. And if you look on your payslip, that'll show how much tax and national insurance has been deducted. Now, other taxes are assessed or calculated by what's called self-assessment. And the clue's in the title. You have to do it. It's all about you doing it yourself. So what is this self-assessment? A self-declared statement of taxable affairs. That's what it is. And we know that as the tax return. Now, on that tax return, you can have both pay-as-you-earn, PAYE, and self-assessment. So the tax return actually brings everything together. Now, currently, the tax return is annual, so you have to do one every year, and you have to do it every year relating to the accounting year of the government, and that's called the fiscal year, and that runs technically from the 6th of April to the 5th of April each year. Now, who is self-assessment for? Well, if you've got something to declare, you have to declare it, and if you have to declare it, you have to do a tax return, so therefore you have to register for self-assessment. Now, quite famously, ignorance is no defence. You're not allowed to not know what you should be declaring. You have a responsibility yourself to make sure that's right. Now, if you have overlooked income in the past, declaring this to HMRC is better than the HMRC finding out and coming to you. They look at it more leniently than if they find out and they think, you've been not declaring things, and that's when you get into trouble. So how does self-assessment work? Well, what you do is you register for self-assessment with the HMRC, and then once you've done that, you will complete a tax return each year, and then you pay the tax in 2 bits. The first one is on the 31st of January, and the next one is on the 31st of July, so 6 months apart. Now, if you need any help or want a bit more guidance about exactly how tax works, or maybe you've got some questions, then by all means get in touch at moneyiq.co.uk, send us an email, text, or give us a call, and we'll do our best to help.